Welcome back. You're watching Stock Watch with me, Nolutando Mthonti-Mlambo, and joining me to take your stock-related questions tonight are Wayne McCurrie from FNB Wealth and Investments and David Shapiro from Sasfin Securities. Please be sure to send your questions on email at stockwatch@bdtv.co.za or via SMS to 41392 or on X using the hashtag StockWatch. Gents, good afternoon, or good evening actually, and thank you for your time today.
Sure.
You know, I like it when you say hello back, David.
Hello.
Yeah, wonderful.
No.
All right, guys, quite a few questions to get through today. Let's start off with this one about the month of September. What we're like 4 days in, it has been quite an interesting time. And the first question is, what is the story behind September? And could the markets get worse from here? Wayne, keen on this one?
Yeah. Look, markets can always get worse from any point, so we don't know. I doubt, once again, very similar to what happened in August, I doubt if we're on the cusp of a fully blown bear market.
Okay.
I just doubt it. This doesn't happen when interest rates are about to fall. There may be overvalued shares. Maybe some tech shares go down some more, who knows? But I doubt in the extreme whether we're on the cusp of a fully blown bear market. That doesn't mean shares can't fall 10 or 15%. They've gone up so strongly this year that it wouldn't surprise me if that had to happen. But, that's not a fully blown bear market. I just think it's almost, buy on the rumor, sell on the fact. We know interest rates are going to be cut imminently, and the market's just taking some profits, and you take some, and profits are always taken in the shares that go up the most. Now, this whole story about September and sell in May and go away and all of this stuff, there is some statistical evidence to say that May, June, July, August, September is a period where some market weakness happens. And you can go and analyze the data and have a good look at it, and it all makes sense. These seem to be the weak months. And yet the year you try and make some money out of that is the year they go up. I actually don't like these sell in May and go away type of stories. It's valuation of the market. Why it's happening now is the market has run ahead, and a couple of shares, Nvidia, have possibly just got too expensive, and that's why they're coming down.
Okay, and that explains the sell-off we saw last night, because that was a bit of a surprise to me, Wayne. Oh, David, do you want to come in on this one? Yeah.
Well, yeah. I just think, it's crazy because on Friday afternoon, ahead of the long weekend, the S&P hit a new high, or close to a new high, sorry. Everything was steady. There was no talk about any problems within the economy. Everything was very peaceful. And then you wake up on, now Tuesday morning, because Monday was a holiday there, and suddenly everything's falling apart. And you say, what happened? And I read an article this morning, I think it was in the FT, one of the FT analysts journalists just said, the only thing that worried me was the date, September. Wow. Why? Friday the 13th, there's absolutely no reason. And I'm not quite sure Wayne wakes up in January or February and says, oh, this is February, this is what I've got to do. Oh, it's March. I never fall for that. So I just go along with the flow and try and get rid of the noise. There's of course what Wayne says, there's truth in it. The markets have had an incredibly good half year, and yes, there are margins for profit taking.
With that said, I think it segues perfectly into the next question here. It is on Shoprite, and Shoprite being the equivalent of an Nvidia in South Africa, says that Nvidia was priced to perfection. Is Shoprite similar? I think that's on the back of the numbers we saw released by Shoprite yesterday. That counter was hammered, quite a bit, David.
For reasons I can't really establish. Yeah, things are going to slow down. Yeah. They got the Massmart, the Massmart acquisitions pumped up their revenue, and that might slow down. Their debt is slightly higher, or they're paying higher interest rates, which could impact the margin. But this is a good business. They do well, and they do things well. They are spending more on a new DC, center, a distribution center. But yeah, these are short-term issues and that. And I don't know why they get hammered to the kind of point that they do. But I think broadly, if we look, retailers around today are all coming down, without whether it's Spar, whether it's Vashini, whether it's Woolworths, all of those are under a bit of pressure. But yeah, it's a good business. And there's still good upside there.
Speaking about retailers, have any of you taken a look at those numbers from Woolworths? Because that was not good.
Yeah.
Wayne, what are your thoughts on that?
Yeah, just on the Shoprite one, there are many characteristics that are very similar between Shoprite and Nvidia. And let's start with the positive characteristics. Yeah. These are good companies. I mean, Shoprite is a good, solid company. The other characteristic is the share price may have just run away far too much. Shoprite's earnings were up single digit. That disappointed the market. When you look at the rating of Shoprite, the market was expecting probably 15% earnings growth, not 6%. So the results were disappointing relative to the share price. Same as Nvidia, the results were disappointing relative to the share price. Doesn't mean they were disappointing results. And the other characteristic that's similar between Nvidia and Shoprite is you buy on weakness. I mean, this is fundamentally a very good company. Just on the Woolworths results, it's the same old. The food side did very nicely. The fashion and beauty in South Africa, even though it wasn't catastrophic, it is still distinctly a mediocre business, and it has been forever. I can't remember when, and it was always going to be it's always going to turn around. And then Country Road in New Zealand, Australia, was quite frankly just a catastrophe.
Very interesting one indeed there. But by the way, could anything happen to change Woolworths' fortunes? We know they don't have local leadership, for instance, anymore and the likes. Anything that they could possibly do better, different at this point? Because as you say, Wayne, it's been the same old story, I think, a period after period.
Yeah. Look, every retailer is battling with the competition that Shoprite is giving them. And obviously Woolworths, their food side's doing well. But everything else is actually quite poor. They must do what a few companies have done now. You almost feel as though they must split the business, because the non-food side, you're actually wasting time and money.
Yeah, I always find the fashion side very difficult there. I don't know what the female or women's fashion's like, but on men's fashion, I always go there with great intention and never come out with anything. Because my size is never there. They've always got too much of another size, none of my size, and so on. Especially the smaller business, the smaller branches, where I don't know why they keep closed there in the first place. They just seem to have stock. So they've got to rethink their whole strategies, particularly where you're fighting with Zara and other such fashion retailers. Country Road has become very expensive and quite dowdy to a large extent. Anyway, Woolworths, I always buy their fruit. I always buy their pastilles. I buy I'm a big shopper with on the food side, but clothing, I don't know.
Yeah, I think that's a very similar picture to me, David, so completely agree with you there. Wayne, this one is for you, I guess. It is on healthcare stocks. It does say, I know Wayne doesn't like local healthcare stocks. Does that include Aspen Pharmacare? I heard yesterday that they have a partnership with Eli Lilly.
Look, it does include... No, let me start again.
Yeah.
Okay.
I'm against the hospital companies simply because the government is trying to squeeze out any profit. They're trying to they are legislating. We've got this whole NHS coming, which I don't think is going to be anything like what was contemplated and is going to take a long time. But it is still a threat, make no mistake about that. And also you have, it's intensely competitive. Aspen is different, still got some threat from NHS and some threat from single exit pricing and all of that, but not as much. But Aspen, unfortunately, hasn't got the best track record when it comes to delivering results. And the results that came out very recently didn't look good. So I wouldn't buy Aspen, but it's not actually in the same bucket as the healthcare, as the hospitals.
David, would you like to add on to this one?
I just think, it's a well-run business. It's a good business. The problem is, and I think what Wayne is trying to say, they make plenty of promises, but they're very slow on delivery, and there's always a restructuring taking place and something happening. They are hopefully moving into new directions, but I think we need a couple of half years or years of delivering on that. So I think that's where the reluctance comes. I was a bit shaken that they were marked down as much as they were yesterday on those results, but there are issues there. It's constantly changing, and you're never quite sure what's coming next. But hopefully, the current businesses now do start to deliver. I think the Eli Lilly is in the is that they're going to be making the injectables. They've got the facilities to do that, but I think it's going to take some time before they actually get that license to do so. It could be 2026. I don't know when, 2027. And there you are. There you have it again, a delayed delivery.
Very interesting indeed. Another one that's here, David, is could gold hit $3,000 by 2026? I thought this was rather arbitrary, but I think, let's answer the question. Is this something?
The one thing about gold is that whenever you get too optimistic, it teaches you a lesson. The gold gods teach you a lesson. It comes down, and it's so hard to read. You know what I mean? It's a commodity. It's not even a commodity that we use. It's a commodity we store and like to stroke and polish and that. But I've got no feel for where gold's going.
Wayne, do you?
Yeah, I think gold could very easily hit 3,000 by 2026. Same as could very easily hit 1,000 by 2026. Who knows? Who knows? I haven't met many people who've got rich on gold or gold shares.
I think that that's the big worry, is that when you buy gold only when you're in a deep panic, and I think when people in deep panic, they don't seem to buy it anymore. So I don't know. I don't even know if there are any gold bulls still around. Are they? They must be getting very old. Very, very old, yeah.
Well, that one hangs, I guess, in the balance. More questions on the go here. One comes up about Fintech. The question is, capital appreciation or a sucker for a Fintech buy? David, you want to take this one?
I actually like capital appreciation. It's a small business. It hasn't got a big market cap, but in its own small way, it's well placed. It's got the businesses that transform you onto the cloud. They run the cloud for you, but they've also got these payment systems. Not only you go into a shop and they've got the devices, many devices, a couple of thousand around the country, where that's where you tap your card and that. But it's also the system behind that they run. So it's a pretty decent business, So, and I think it's split. I think the payments and the software business are equally split. It has kind of outperformed the market for some time in its small way, but it's still very small. So yeah, it's a decent business if you like small caps. Very small caps.
Are there any interesting fintech businesses listed in South Africa? If you're looking for a fintech play, it might be better just to look in the US. Can't think of one.
Where fintech is moving is a lot of the cell phone companies, the mobile companies are going in that area. That's where they're trying to benefit, and to a large extent, it does define them. How successful they are, I don't know. You've got ARC, isn't ARC, which is part of African Rainbow Capital. I think they've got a couple of businesses that they're invested in that are in that area, but you can't pinpoint any major Visa or MasterCard or anything around PayPal or anything like that. No.
All right, let's move on from this.
Look, what I do know is, everyone is into fintech. The banks are into fintech. The retailers are into fintech. So anyone who's got a big customer base, or anyone who has lots of feet walking in the front door every day, is into fintech. Yeah. This is a seriously overcrowded market.
Yeah.
One of my theories is the fact that one of the most profitable things to sell in the world is debt. I feel like everyone is just trying to get to a point where they can sell a consumer a little bit of debt.
I don't know. I haven't changed my bank and I've been working for 55 years. I'm still in the same bank,
Yeah.
and everything's too complicated for me to change, But I am of a much older generation.
Yeah.
And
Don't
I
worry,
still
David.
use Fintech. I still use the apps that they give me.
Yeah.
I bang away at them, but I haven't got any desire to go into any of the new banks that are around, I don't know about Wayne,
Yeah.
He's a FNB man, always been.
Have you
No,
always been
I've
an
also
FNB
been
man?
with the same bank forever.
Yeah. Yeah. Same. I could be an old soul here, but same bank account. My mom opened a student account when I was, I think, 10, and that's been the bank account since then. Okay. Let's move on now to a furniture question around Shoprite. Pepco bought Shoprite's furniture business. Please, can the panel speak of furniture stocks? Any value in furniture stocks? David.
You know what? They used to be a very important part, and I think simply because they charged you a lot. Everybody was HP. You went on to hire purchase, and around hire purchase, they'd sell you insurance and all kinds of things. And they made all kinds of money, not out of selling the furniture, but out of the financial services attached to it. I don't know. It's Lewis is there. They've been around. They're a reasonable company that always seem to be doing okay, but I don't know. This is OK Bazaars that I think Shoprite have sold. The old OK Bazaars, but I don't know. And when I look at those numbers, they're small relative to the other sides of the business. Yeah.
I'm also thinking about the fact that Shoprite. Please come in, Wayne. Go ahead.
It makes sense that Pepco's buying it because they've got JD. But they're selling it at 600 stores, and they're selling it for nothing, So this is not a thriving operation. This is not a good operation because it's clearly not making big money because Pepco's paying, next to nothing for, a very, very large retail footprint. And of course, Shoprite, same as maybe Woolies, must take a lesson from Shoprite. They obviously aren't happy and they aren't good at selling furniture, so they're just getting rid of it. They're sticking to what they know.
Funny for Sheeny, it's an interesting thing because you've got Mr. Price in there, you've got H&M, you've got Fashini in a big way, and Fashini are upgrading. Yeah. If you go into the at-homes now, they're far more attractive and much better goods being offered than they were a couple of years ago. So they're upping their act there. They obviously benefit. But that's more at home, hey? That's towels and kitchenware and all kinds of things there. And very attractive. But I don't know any, Lewis seems to be the only one that's around.
All right, let's move on from this one. All right, let's talk about the property sector now. Can the panel weigh in on the property sector? I hold Growth Point, but I wonder if I could get more bang for my buck elsewhere. Wayne, want to take this one?
Look, Growth Point's, I think it is the biggest property company, and it's the most well-diversified of all the property companies. So I would actually stick to Growth Point. As we saw during the COVID, a couple of these more specialized, smaller property unit trusts their sectors took serious strain. So I think you're well diversified enough in Growth Point than to worry about trying to find another property company. I still think they show reasonable value. They're still at a big discount to net asset value, and you still get a half decent yield out of it. So I would just stick to Growth Point.
Speaking about Growth Point, that office part of their portfolio here, I think the office seems to be making some sort of a recovery. I'm heartbroken that employers couldn't help but bring all employees back into the office, and that's really where that recovery is from here. But the office element, not really the laggard that it used to be, Wayne, or still lagging, but recovery.
No, it's getting the vacancies are still above long-term averages, but they are down substantially from what they were 3 years ago. And I certainly know when I go into the office now, get there early, otherwise there's no parking.
Yeah. Let's also talk about Telkom here. They've gone on to get all the regulatory requirements to sell off their towers business. MTN did the same thing. I'm just wondering if there's thoughts on that, and if for a telecom retail investor here, there's some money to be made from this move.
It's like a leaseback.
Yeah, look,
it is a leaseback.
Yeah, it's
it is.
a leaseback. It's a financing operation.
Yeah.
A lot of
telecoms
do that.
they need money.
Go away.
Yeah. Sorry. They need money to finance the cell phone business and the data business, and this is a way of raising cash without showing debt. Is that you sell your business to someone else, but you're the only user of those towers. So it is in effect a financing operation, and there's nothing wrong with that, by the way.
Yeah.
But understand they will have exclusive arrangements with their towers that only they can use it, and there'll be levels of service given, etc., etc. So it is in effect a sale and leaseback. But Telkom needs the money. Now, look, I think Telkom's done phenomenally well, considering where they came from and considering their competition. It doesn't mean I'll buy their shares. These smaller players are really always running hard to stand still.
Globally, it's there are only two gorillas in the room. No matter where you go, whether you're in the UK, whether in Europe, whether you're in America. I think in America they've got three gorillas, which is AT&T, Verizon, and maybe one other. There's not enough room here for three. You've got Vodacom, you've got MTN. As Wayne says, the smaller players battle because they just knocked out of the way. And if you start to get too naughty, they just start a price war. You're out of it. And we're not, the consumers are not discerning.
Yeah.
They just go for price.
Yes, I agree.
So do you think they care whether they got Cell C or MTN or anything? They what's the price? How much it cost me? That's all. So it's a very difficult area to play in.
And the last question for tonight, Cashbuild. They came out with numbers today. What do we make of these numbers? Top line growth, not quite bottom line growth here, but they seem to be a little bit optimistic about the future.
I hope so.
Look, I think they're over the worst. I mean, they had a wonderful time.
Yeah.
They had a wonderful time, COVID and just after COVID, absolutely shooting the lights out. But it's been very subdued since then. But I think it is turning the corner, and certainly lower interest rates will help going forward. Within its sector, I actually like the company within its sector, but it's a very difficult sector. It's very volatile.
Yeah. They've always been a well-run operation. They've been open. They never tried to hide anything, and they've told you exactly like it is. And people are not building, not even the bucky builders. They've come there with a bucky and go fill up the back with a few bags of cement and so on. And it's really a reflection of this economy, of how difficult it is. And you see it, even in PPC, and you see it in that area. We need a strong economy, or a stronger economy, for them to turn around. But you can't fault the company. They are well run. Yes, they made write-offs because the acquisitions they made just haven't returned what they thought, but that wasn't their fault.
Let's get into some stock picks.
If you need Wayne doesn't go there. He's not a Cashbuild man.
He's not a Cashbuild.
He's a builder's warehouse person.
I tend to think that they're all the same thing, to be honest. Let's head into some stock picks now. Wayne, which counter are you loving this evening?
Look, I'm going for NVIDIA. The only problem with NVIDIA and similar shares is the share price. There's nothing wrong with the company. Now, I mean, we all know it got walloped last night, and it's quite possible there's more weakness to come. So maybe don't buy today, maybe wait a little, but you're actually getting an opportunity to buy a really good company with fantastic outlook. I mean, AI is here to stay. So all that, as I said, all that's wrong with NVIDIA was the share price. And now it's closer to 100 compared to closer to 150. I think it is the time to buy. And if there is any more weakness, buy on the way down, because this is not a .com. This is not a bubble. It's just a case of the share prices were just crazy, and now they're at, I think, more realistic levels. But I once again stress there still could be quite a bit more downside before it bottoms out.
And David, which counter do you love today?
That was mine.
Okay, what are the odds?
But what I do want to say is that, I echo exactly what Wayne has said in that. And, this morning I went in and I started to look at the upgrades or what analysts say about the company. And it's a well-covered business. And of 50 odd people that follow it, and these are experts that you pay lots and lots of money to cover, I couldn't find one sell.
Wow.
There were one or two holds, but the majority were buys. And their target prices a year out was in the region of 148, 155 in those areas of that. So, I have to go with the experts, people who understand that business. So just to echo what Wayne says as well, just wait for the right opportunity. Be patient. Don't be disturbed by the noise. You will do well out of this.
Oh, gentlemen, always a pleasure having you on Stock Watch. Thank you so much for taking us through tonight. That was tonight's Stock Watch. Thanks to our guests, Wayne McCurrie from F&B Wealth and Investments and David Shapiro from Sasfin Securities. Up next, The Close. Stay tuned.